If you spend $1,000 a year on suits, black trousers or smart casual outfits you only ever wear to work, here's a number that stings. The ATO gives you exactly zero back. Even when your employer makes that clothing compulsory, the tax office classifies it as conventional clothing and slams the door on the deduction. Roughly 6 million Australians claim work-related clothing every year, and most of them don't actually know the rules. Today, we're going to fix that with 3 moves. Check whether your uniform is genuinely deductible, recalculate your laundry the way the ATO actually allows, and classify every item before you lodge. Here's the number to anchor on. The ATO lets you claim up to $150 a year for laundering eligible work clothing without keeping any receipts. ATO Guidance 2024-25. But here's the part nobody tells you. Go above that with total work expenses over $300 and you trigger full record keeping or risk losing the lot. 3 moves, all free, each under 20 minutes. First, check if your uniform is actually deductible. Second, recalculate your laundry using the ATO's per load rates. Third, classify every clothing item before you claim a cent. Move 1 is understanding the rule that quietly nukes most claims. The ATO explicitly says you can't claim buying, hiring, repairing, or cleaning conventional clothing you wear for work, even if your employer says it's compulsory, and even if you only ever wear it at work. Conventional clothing means business suits, black trousers, white shirt, skirts, socks, and everyday enclosed shoes. ATO Clothing Guidance. Let's put a dollar figure on it. Suppose Emma, an office worker, spends $1,000 a year on suits and formal wear she only uses at work. Under ATO rules, that's entirely non-deductible, costing her about $325 in foregone tax benefit at a 32.5% marginal rate, modelled on ATO rules. It even catches retail staff. The ATO says clothes you must wear from the store you work in aren't deductible because they can be worn outside work. Move 2 is the laundry and record keeping trap. Even where clothing is genuinely deductible, the evidence rules quietly shrink what you can claim. The ATO lets you claim $1 per load if it's only work clothing, but just 50 cents per load if you mix it with other washing. ATO laundry rates. And you can only skip receipts if your laundry claim is $150 or less. Here's how the caps cut into real claims. Take Mark. He claims $250 for laundry, but keeps no diary, breaching the $150 no records cap, so the ATO can disallow the entire amount if audited, losing him around $81 in tax benefit at 32.5%. Meanwhile, Sarah, who separates her work-only loads, legally doubles her claim from $75 to $150 ATO laundry rates. The myth that costs people the most. My boss makes the dress code compulsory, and I only wear those clothes at work so I can claim them. The fact, straight from the ATO, you can't claim conventional clothing like black trousers, white shirts, suits, or stockings, no matter how compulsory it is. Only occupation-specific, protective, compulsory, distinctive uniforms or registered non-compulsory uniforms qualify. Put the two costs side by side. A typical office worker loses about $325 a year on non-deductible suits at a 32.5% rate. And someone overclaiming laundry without records risks around $81 a year if audited, modelled on ATO rules and caps. Either way, you're either leaving legitimate money behind or gambling the whole claim in an audit. Meet Liam. He's 38. An assistant store manager at a fashion retail chain on about $80,000 a year, with 29 years to go until retirement. He spends roughly $1,200 a year on store clothes and smart casual outfits he only wears to work, and he claims it all through his individual tax return. Here's what Liam found when he actually read the rules. Discovery 1. Most of that $1,200 isn't deductible at all. Liam learns from ATO guidance that clothes bought from his own fashion retailer, even when required, are conventional clothing suitable for everyday wear. Only his $150 protective boots qualify, so his deduction collapses from $1,200 to $150, and his tax saving from about $390 to $49. ATO rules, 32.5% rate. Discovery 2. His laundry claim was nearly 4 times too high. Liam had been informally claiming $200 a year with no records, but his real pattern is 2 mixed loads a week. At the ATO's 50 cents per mixed load rate, that's 2 loads times 52 weeks, just $52. ATO laundry rates. That leaves $148 sitting at risk of being disallowed. Discovery 3 is the one nobody sees coming. Liam's employer has a branded polo shirt that's recommended but not compulsory. He discovers non-compulsory uniforms are only deductible if the design is registered on the ATO and AUS Industry Register of Approved Occupational Clothing and Publicity, and his employer confirms it isn't registered, so $200 a year on branded shirts is non-deductible, costing around $65 in tax, ATO, AUS Industry rules. Add it all up across Liam's career, between the non-deductible clothing, the trimmed laundry claim, and the unregistered uniform, the modelled, lost or at-risk tax benefit is about $423 a year. Over 29 years to retirement, that's roughly $12,267 in tax he either never had access to or never legally claimed. Modelled on ATO rules, 32.5% rate. So, could this be you? Sign 1. You claim suits, black trousers, or smart casual outfits your employer requires. Sign 2. You don't actually know whether your uniform is compulsory or registered. And sign 3. You've claimed laundry as a tidy round number with no diary and no load count. If any of these ring true, the next 3 moves are for you. These 3 moves do 2 things at once. They make sure you claim every dollar you're legally entitled to, and they make sure your claim survives if the ATO comes knocking. That balance matters because the wrong claim doesn't just get denied. It can drag your whole return under audit scrutiny. Let's walk through each one. Move 1. Check whether your uniform is actually deductible. Find your written uniform policy and confirm 2 things. Is wearing it explicitly compulsory, and is it distinctive with a logo or unique design? Then ask HR the key question: is our non-compulsory uniform registered on the ATO Register of Approved Occupational Clothing? Only items that pass these tests belong in your claim. This is general information, not personal advice. Here's how. Read your written uniform policy and look for the word compulsory. Ask HR directly whether the uniform is registered with the ATO and AUS Industry. Then list only the items that are compulsory, registered, or protective. What good looks like. There are no business suits or generic black trousers anywhere in your claim. Move 2. Recalculate your laundry using the ATO's per load rates instead of a guess. For 1 month, track your loads, separating work-only washes from mixed loads. Apply $1 per work-only load and 50 cents per mixed load. Then multiply by 12 for a defensible annual figure. Keep that 1-month diary as your evidence. Here's how, step by step. Log into MyGov and open ATO online services to find the D3 instructions. Count work only versus mixed loads across 1 month, apply the ATO rates, and scale to the year. Keep your claim under $150, unless you've got robust records. What good looks like? Your claim equals loads times the ATO rate, backed by a real diary. Move 3. Classify every clothing item before you claim it. List all the clothing you use for work with purchase costs and any repair or cleaning costs. Then tag each one against the ATO's categories: occupation-specific, protective, compulsory, distinctive uniform, registered non-compulsory uniform, or conventional. Only the first 4 go in your D3 claim. Everything else stays out. Here's how. List every work clothing item and its cost for the year. Tag each one against the 4 deductible ATO categories. Then exclude anything that's plain clothing, business attire, or an unregistered, non-compulsory uniform. What good looks like? Your D3 claim contains 0 conventional clothing items, even the ones your employer demands. Why does this matter right now? Before 2017, the ATO began publicly warning about overclaimed clothing and laundry deductions, tightening its audit focus on conventional clothing. In 2023, to 24, it refreshed its guidance, reiterating that conventional clothing is non-deductible and clarifying the $1.50 laundry rates and the $150 threshold. And the 2024 to 25 D3 instructions keep the strict wording that suits, white shirts and stockings are not deductible. Audit pressure is only rising. Once you've done the work, verify it. You should see only deductible categories in your D3 claim. No suits, no plain clothes. Confirm your laundry figure equals loads times the ATO rate supported by your 1-month diary. And if your total work expenses top $300, make sure you've got written evidence ready before you lodge. Everything in this video comes straight from ATO guidance, the clothing, laundry and dry cleaning page, the 2025 individual tax return D3 instructions, and the clothes you wear at work rules. All the links are in the description below so you can verify every figure and check the latest thresholds yourself. So now you know the 4 deductible clothing categories, the $150 and $300 thresholds, and the per load laundry rates that actually hold up. Next week, we're tackling the car and travel logbook trap that quietly costs Australians thousands at tax time. You won't want to miss it. If this saved you from a denied claim or an audit headache, do one thing for us. Hit subscribe so the next tax rule breakdown lands in your feed. We read the fine print so you don't have to, and there's a new one every week. See you in the next video.